Markets fall and oil spikes to $90 as the Iran ceasefire expires tomorrow.
Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The major indices closed red today.
The S&P 500 dropped 45 points to 7,060. The Nasdaq fell 144 points to 24,260, and the Dow lost 290 points to finish near 49,150. The Magnificent Seven was mixed.
Apple dropped 3% on CEO transition news.
Nvidia, Alphabet, Meta, and Tesla fell up to 2%. Amazon and Microsoft bucked the trend, gaining over 1%.
Healthcare and energy were today's winning sectors, climbing roughly 2% and 1%.
Conversely, industrials and technology lagged, both shedding nearly 1%. WTI crude oil surged 3% to $90 a barrel. Bitcoin remained resilient, adding 0.5% near $75,800. Gold fell 2% to $4,740 an ounce, and silver traded near $77. The impending expiration of the United States and Iran ceasefire tomorrow was the primary catalyst today. The Strait of Hormuz remains effectively closed to tanker traffic, sparking fears of a sustained energy shock. This directly caused WTI crude to spike to $90 and pushed investors into the defensive energy sector while weighing heavily on the broader equity indices. Next, the Senate Banking Committee confirmation hearing for Kevin Warsh, the nominee for Federal Reserve Chair, delivered a hawkish surprise. Warsh stated that inflation is a choice and signaled a willingness to keep interest rates higher for longer. This rhetoric pressured equity multiples and directly caused the sell-off in long-duration technology and industrial stocks. Finally, a flood of first-quarter corporate earnings highlighted a divide between resilient and vulnerable companies. United Health surged 9% after beating estimates and raising guidance, which single-handedly lifted the healthcare sector.
In contrast, GE Aerospace fell 6% despite an earnings beat because they held full-year guidance flat due to macro uncertainty, dragging the industrials sector down.
In the bond and currency markets, the 10-year Treasury yield ticked up to 4.3%, while the 10- and 2-year yield spread remains steeply positive. The US dollar index held flat near 98, but the VIX volatility index breached the critical level of 20. This combination of higher yields and rising volatility shows investors are actively repricing the market for prolonged inflation and immediate geopolitical tail risks.
Interestingly, the CNN Fear and Greed Index still reads around 69, remaining firmly in greed territory.
This implies a massive divergence where retail momentum remains overly optimistic, potentially underpricing the severe risk of a market correction if diplomatic talks fail. Looking ahead, the market is at a precarious crossroads, caught between resilient consumer spending and a hawkish Fed pivot, meaning the true test of this bull market begins now. For the coming days, keep your eyes on 3 critical events. First, the US and Iran ceasefire officially expires tomorrow.
Second, Tesla reports its highly anticipated first-quarter earnings tomorrow after the closing bell. Third, the preliminary April S&P Global Manufacturing and Services PMI data drops on Thursday. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.